Well, good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Tuesday, the 6th of June. Wasn't that a famous war day? 6th of June, 2023. And we are sitting here just after 6 p.m., so a lot of sixes involved there. No, I hope it's not the devil's doing. Interesting markets. Tomorrow we have a big auctions going on. The Treasury is issuing, I think, 130 billion or so of notes. So we will see. That's a big number. And let's just see what they do. What's the yield, the bid to cover ratio. And I want to see where the money's coming from, too. A lot of people think, it'll come from the money market funds. These are going to be good rates, high rates, and nothing wrong with that. I don't know that the banks will reach for anything. The duration's 4, 8, and 17 weeks. So, big banks could go for maybe the 4s. I don't know that they should go for the 8s. They have a new problem coming at them in reserve requirements, and you'll hear about that this month of June, where the government's going to kick up what their reserves have to be. As for news of the day, it's the day after the event by Apple. And I think you have to understand that the Apple event is about duration, not this one product. This is a unique product, yeah, but who's spending $3,500? Go on, get it for your kid. I don't think you're going to do that. It'll be a select group of people that get it, the hardcore techies that have money. The product will be outdated quickly. It's just the way technology goes. It shows something to Metaverse and Google and others that are developing these headsets that, hey, if Apple can sell them at that, and that's a big if, we'll see, maybe there's a way to monetize what they're doing, because right now they're selling them at every unit probably at a loss. But I don't know anyone that has one. I'm sure you do, but I don't. Not one person, okay? And I know a lot of young people. I live in an area where you got a lot of tech people. I don't live far from where the headquarters are for Salesforce and Google, and all these things are right here. So I live in the area, and they live all around me. And it's cool, but I haven't seen anybody walking them with one. That's the way I'm saying it. When I look at Google, and that's why I bring it up, this is a powerful chart. It's still looking very strong. I mean, this market's the market that doesn't give up. This is anything with AI is on fire. I think you know that. You'll get corrections. I'll show you them coming in stocks in the video. What? You'll see. But moving away, but you're at a zone where I think the smart money today took the money off the table. Getting up to the upper Bollinger Band, 128.28, 128.35 is the band. It's arcing down. This is where the resistance, serious resistance, begins. It is not the same program where you had major congestion and then broke out. This is the breakout, and now you're coming back up there. It's generally a resistance zone. Momentum, you are not embedded. You lost it, you fell, you came back up. But the interesting part, and that's why this was bullish, after you got here, and I'll come back to it, and this is called a failure if you've taken my course on the embedded reading. Here's a market that is embedded. You now get to the point where you get a 76 reading, unless you go back the next day, the very next day, and come back to the 80s, and you did not. It's lost. You shouldn't be getting over these highs. And if you do, the next objective is the Bollinger Band. It's what I teach in the course that I have. And you can see how this is working itself out. A lot of times these things do work. They work really cool. Schwab. Okay, this is good action. I don't know if you're watching very quietly. KBE, KRE, the regional bank indices popping to the upside. They're doing nice things. This thing ended back here. We talked about that, and it's over. Now the question is there a way to come in, and do you want to come in right in front of the Treasury offerings? That's the only thing I can't answer. That's the only headwind I currently see. And of course, what is the Fed going to do and say a week from tomorrow? Yeah, the 14th of June is the FOMC meeting. I still think they're going 25 basis points. In XLF, you're up to the upper Bollinger Band. So the financials, well, if they can make money in this environment, if interest rates aren't going to kill them, away you go. We've had a big sideways action here. This market can surprise you to the upside if it starts clearing this, because the next resistance is all here. The combination of the 200 and the 100-day average, which on this chart doesn't, I realize it's only 60, 70 cents, but as a chart, that's a big move to get up there. In XLI, look at how the market went to the 100-day average, and now it's fighting in between that and the Bollinger Band. It is overbought. It's easier for the market to fail right here than it is to go higher and stay over a Bollinger Band, so be careful. Now, here's the warning sign in the video that occurred. If you sit there and you take a look, the market yesterday had still both numbers over 80. It had been embedded, and now it's lost it. Now, one day is just the first day, but on the close today, I think the quote-unquote smart money said goodbye, because the odds favor from here that you'd have to either re-embed tomorrow, and to get even another leg up, you got to get over that high. Two parts. Otherwise, if you don't re-embed, odds favor price and the 18-day average are going to try to make a run at each other. SOX, the same thing. You lost the embedded reading here. Again, the 18-day average is the objective on a momentum. I don't like being short over the 18-day average, but I like to be out in longs when you lose an embedded reading. That's what I teach. And you crisscrossed, and now you're getting the pattern of lower highs, lower lows. So I see these markets in a potential of correction. I'm wrong if you go up and make higher highs over the last highs. In the home builders, this is the zone where I'm looking for it to run out of momentum on the upside. Again, they got overdone on the downside here. They're now getting overdone on the upside. It's gone from lower Bollinger Band to upper. These aren't tradable. You have to sell the exact high here to catch this move. You then have to come in and buy the low. You're fighting the trend at that point too. There, the bias was down, but you had to buy it under that red line to catch the action. In XLE, this is just like we've got on the other part of the energy. Bollinger Band, upper band, back to neutral and sitting here, spinning. But the longer you spin, the better it is for the Saudis, because as long as they keep those production cuts in, and as long as we keep missing this recession that never seems to come, how often do we hear about it? And it's not here yet. We're seeing wobbles. Did you see the wobble today? Let me give you one that you should look at. We had the Red Book Group come out this morning with their sales. And if you took a week ago to another week ago, I think it was the lead figure, you went negative for the first time from the last year. Negative for the first time. That's big. You haven't done that since COVID. We all came out of COVID, then the sales exploded because you were going to the stores. It was a 2.6 reduction, actual negative number. We have not done that. That is a sign that something bad is going on right now. So I looked at it and I made mention of it to all my clients today. In the gold market, you are oversold. The resistance should be the 18-day average. The temporary support is the 100-day average, but the bears are in control unless and until you take out 184.21 and close. Then over 183.28, the 18-day average. Then I turn to the bull side of the market, looking for wherever the Bollinger Band is for the potential there. Silver's caught in the battle between the red line, the 18-day average of closes, and the green, the 100. Momentum carried up in the market. Once you lost the embedded reading right there, you went back to that 18-day average, and that's where the market stalled out. Copper had lost the embedded reading. See how the red line swung back over 20? You went right to that 18-day average. You haven't gone anywhere since you got there. You're just marching time and seeing what's next. China made 2 moves already this year, cutting deposit rates. So what they're saying to their populace, in theory at least, is, hey, we're going to pay you a little less from all the state banks. Go out and spend your money. You're not going to make more by keeping it with us. But they're not doing it by big amounts. They're doing it by like 10 basis points. That's not enough to motivate people. The dollar has gone from an upper band and the 200-day average through down here to the Bollinger Band and 100 and just sort of stuck in a big move. I guarantee you there were people crying the blues here on that day because it just wiped out everything and then came right back. FXE, you're oversold. You have a market that had a bearish embedded reading, lost it, didn't gain it back. If you take this number out, I don't know where you're going. So if you get under 98 and a quarter, it's only 40 cents from here. It's a problem for me. But if it starts railing, I see the clear resistance at 99.81 to 98.50. So you put it together. Those are your plans. Trade small right now. Don't get over aggressive. It's a hit and run type market in a lot of these things as they're moving from upper to lower Bollinger Bands. But where you take your big edge is right here with all the free offers that we offer to you. All you need to do is when you go to our website at iraepstein.com, hit free offers, and just click on what you would like to get from us. I solidly recommend that you take advantage of our price count offer. It is a chart that uses proprietary software that we put together and don't make available other than in our charting software. And what it does from there is you could figure out high probability first zone of a market going to a trade, then lower probability second and third. Of course, you have to have an area where the trade isn't working. We have that too. Look at it. It's not an entry point software. It is a zone to come out of a position software. It's very interesting what it does. I've been using it for years. It's fascinating, and I've never seen it anywhere else. And then you put together all the rest here, all the different rune indicators we have, the pivot points, everything you want's right there. How do you get it? Move your cursors to the top up here, give a click, go to our website if that's not it, at iraepstein.com, free offers, or call my staff. They'll work with you at 866-973-2077. I'm Ira. I'll see you first thing in the morning.